The trading month of March has essentially come to a close. Today is the 30th, and there's just one more trading day left in March. So, practically speaking, the month of March has closed, and I would like to review the price action of the fourth trading week of March 2025 and my trading activity, the trades that I took, how they played out, and what I can learn from that. Since the month has essentially ended with just one more day's worth of price action left, we can essentially already begin to, you know, analyze the March monthly candle. So this is it on euro dollar. This is it on the pound dollar. This is it on the New Zealand dollar. So far, on all three pairs, it's a bullish candle. On New Zealand, it has retraced to about 50% of its range. On the pound, it's still very bearish near its high. And on euro, I said bearish, very bullish near its high. And on euro, although euro expanded much more to the upside, the retracement is deeper. But given the candles range, it's still in the top third of the candle. So assuming Monday trades lower, no, it's difficult to imagine this candle turning bearish or this candle becoming a doji or this candle, doing anything to significantly alter the way it currently looks with just one more trading day left. Heck, we're probably going to see it rally even more on Monday for it to close very near the high. I'll go into what this could potentially mean in my forecast video for April. But for now, let's look at the weekly candle that has just closed. Now you can see that this weekly candle was essentially a retracement candle that started here, traded a little bit to the upside, then traded bearishly into this imbalance region over here, then pushed back to the upside away from that region. All in all, you can see that on the daily time frame, it's a bit of a consolidatory week of price action. So you can see two up close days, Friday, Thursday. Then you can see three down close days, Monday, Tuesday, Wednesday. So price essentially didn't really go anywhere. Similar situation on GBP USD. GBP USD is even more obvious that it's a consolidation. You can see we have Friday's price action, doji, Thursday's price action, try to rally, close near the middle, Wednesday's price action, Tuesday's price action, and then Monday's price action. So you can see that price is generally stalling after this massive expansive move. So you can look at this as the correction, but because the momentum and the volatility that engineered this upward movement is so strong, market is having difficulty retracing sharply, and so market is essentially just stalling. Similar situation here. We've still not been able to get back to 50% of this range. And so we'll see if price wishes to essentially start trading higher from here, or if it will find resistance somewhere in this level to continue retracing to below 50% of the range before then continuing bullish. That said, this was how I traded. This week, I had only one trade. It was a short trade on Euro USD and it was a loss. I also missed one trading opportunity that I decided not to take because, as far as I was concerned, it was counter trend and it did not meet all my rules. Now, the rule that it did not meet is a rule that I am increasingly learning I can do away with because it's not, turns out that's not the most important component of my system. But I decided not to take it because I was more confident in the short trade that I wanted to take. So it was a long setup into my point of interest for the short trade. And I'm cautious about taking those kinds of trades because if it ends up being a loss, you'll be asking yourself, why didn't you just wait for price to get where you actually wanted it to get for you to then do what you had planned to do? In hindsight, though, I'm learning that I can give myself a little bit more permission because I need to start trusting my instinct that I've developed over time to take those counter trend trades. We're already on Eurodollar. Let's dive right into it. I believe it was on Tuesday. Now, so both trades, both the long that would have played out for a win and the short that I took that actually ended up being a loss were taken on Tuesday. And so this was the price action. Let's start on the higher time frame. Now we can see that on Tuesday, coming into Tuesday, this is what we had seen. Price had topped out from this huge bullish range and had started trading to the downside. Now, if you remember, I just drew the Fib tool. Generally, there's this massive daily imbalance here, another massive daily imbalance here, all sitting around 50 to 75% of the range. And so if you see that what happened was price pushed to the upside, came back down, tried to rally again, barely took us this high, then collapsed back into the range. That sort of thing tends to signal the beginning of a reversal. Now, a reversal on the lower time frame, but a retracement on the higher time frame. And generally, you can expect retracements, back into equilibrium or a discount of a bullish range. And so for now, the predominant short term at least, and short term is relative because this is the 4 hour time frame. So this is many days worth. If I just do this, this is this is 12 days worth of bearish price action. So you can see that for a day trader, the predominant trend is bearish, trading, looking to take the market lower into a discount of the overall daily, weekly bullish price leg. That said, you can see that from the previous week, price created this 4 hour imbalance, didn't tap into it. I was thinking when price was creating this rally that it would take this high out, didn't give me an opportunity. And so what makes me shift my point of interest? It is when a new point of interest is created, and that was created here. After this 4 hour fair value gap, this push broke below this low, closed below it, created this 4 hour fair value gap. And so I was just looking for a time based liquidity sweep into this range for the price to then trade lower with this imbalance being my target. Now, if you look at what price eventually did, you say, I was right about that. But merely being right about the markets does not mean you'll be right about your entry, does not mean you'll be right about your stop, doesn't mean you'll be right about your target. And you have to trust your system even in the times when your analysis is right, but the market does not unfold in a way that permitted your system to make money. That's very important. And so, although the market eventually did what I wanted it to do, I'm not upset. Well, of course, I'm not happy about it, but I'm not changing anything merely because it did that without giving me any profits. So, on Tuesday, this was what happened. On Tuesday, you can see that this was my draw on liquidity, the start of this fair value gap here, which is visible on the daily and on the 4 hour. And so as price was getting closer to it, I was just looking for any reason to take price lower. Now you can see that on this day, Monday's price action was what created the 4 hour fair value gap. You can see that Asia created this nice range, these relatively equal highs that could be swept, plus this high that was created the previous day. And so I wanted to see price take these highs out for me to then take a short trade from this area. But before that happened, what do we see? We can see that price traded lower, took out the previous day's low. Now, this is why I could have taken the trade. This is previous day's liquidity. It's a very powerful component of my trading system, of my trading setup. It's a 4 hourly swing point. If you go to the 4 hour time frame, you'll see that it's a 4 hourly swing point. That was, so you can see this on the 4 hourly time frame, 4 hourly swing point, previous day's low, time based liquidity that was taken out. And it got taken out when I was anticipating for price to trade up into this 4 hour fair value gap so that I could take a short trade. So everything aligned in terms of if I am to have a trade, then the draw on liquidity is this 4 hour fair value gap from where I would then take a short trade to the downside. Now, the reason I did not take it is that one, I like my trades to have the time based liquidity sweep, but into a fair value gap. And you can see here that when you go back in price, there's no fair value gap sitting below this low that price took out. And so the only element, again, it's also a counter trend trade because it's a bullish trade in what is predominantly a downtrend. And I am only looking to take shorts in the downtrend. Previous day liquidity being swept can be a catalyst for a pullback into the point of interest, which is exactly what this trade did. But you won't always get the sort of price action. You won't always have this play out because what if price wanted to do what it did here, for example, where you would be thinking at this point, oh, I want price to take out these highs to trade into this 4 hourly fair value gap for me to then take a short trade. And it never did that. So imagine if you had gone long and you were targeting the 4 hourly fair value gap as your take profit. So you can see that in the market, everything is probabilities. And so I'm not upset with myself for not taking this trade. I'm just beginning to reevaluate to determine whether I want to add the risk of taking these kinds of counter trend trades to my system so that when they play out, I will take the wins that they bring. But when they lose, it means I would also have to endure the losses that they bring. And so on Tuesday, this was the setup. Beautiful engulfing candle after time based liquidity had been swept. Targeting 3R would have brought me up into the 4 hourly fair value gap. And so that played out, but I was not in it for the reasons that I just explained. Now, look what happened. When price eventually got to my point of interest, it took out the liquidity. This was my entry. You can see that it essentially traded through the 4 hourly fair value gap, then printed this beautiful bearish engulfing candle. This was my signal to go short. I took the trade here. My entry was here. My stop was above this swing high that I was anticipating to have been created, and then targeting 3R. And what do we see happen? Price came, took me out, then printed another bearish engulfing candle, then took that out, then printed this shooting star candle that's then held. And now the reason that you don't go in again, this is why you don't revenge trade. If the market wanted to do what I was anticipating that it would do, which is just take out this liquidity, trade into the level, show me the first sign of bearishness, then I enter and then it collapses. If it was going to do that, then this first entry should have held. But as the markets decided that they wanted to consolidate a bit and manipulate a bit, it took out this entry. If I had gone short here again, it would have taken me out again, by which time I may be out of capital or might have taken two losses. So for you to take this type of win, you have to be willing to take three losses because you take this first loss here, you take this second loss here, and if this one was also going to be a loss, assuming that price was just going to continue to the upside, then that would have been three losses for what should have been only one. Of course, if you are willing to take the three losses, then you would eventually have taken this win. But for what? Because you would have been minus 1R, minus 2R. Then you take the 3R trade and you just make 1R. So why risk a potential minus 3R on the day when the return, even if it plays out, is just a plus 1R on the day? You see why you only take one trade per setup. It does not, what the market does after it has taken you in or taken you out is none of your business. What concerns you is take the trade when your setup prints and see what happens. If what happens is not what you wanted to happen, then it doesn't matter. So this eventually happened, that the market traded lower. It's not the market doing what I wanted it to do. I was right about the general analysis that price still needs to come down into the daily fair value gap, but I was not right that that move would happen from here, and that's okay. And so that was essentially my trading for this week. We'll see what April has to offer.